Hey everybody, this is Alex, and I'm going to show you how we can integrate Python, KDB, and RabbitMQ into one system. And to do that, we're going to simulate an exchange. So just like a real exchange, we're going to have a consolidated order book, which is just a summary of all of the orders being placed at any given point. And we will have some market participants, which are going to be just like individual traders that are sending in their buy and sell offers and are also placing trades. And finally, we will have our own strategy, which is to analyze historical data and determine whether or not we should place a trade, if we believe it's a high probability of a positive P&L. So once our trade is placed, the strategy will maintain that position. It will attempt to sell it or cover it at a profit, and then also it will maintain a risk control. So if it gets too heavy on the long or the short side, it will begin to unwind that position, and if the losses become too heavy, it will also begin to scale back in that position. So there is going to be several technologies used here. So first of all, KDB, which is a great time series database, will be used to maintain our historical data. And the KDB is very fast, it's very efficient, and it's used very widely in the financial industry, which is what we're trying to simulate here. So it's very appropriate for that. It will run in the background on the KDB server, taking trade data which will be fed to it and recorded for our strategy to analyze. Then we will have RabbitMQ running as well, which is a message queue software. It's great for taking inputs from various clients, combining them into one, processing them, and sending out responses back to the client. So it can handle various languages, feeding it at the same time, various machines, local or remote. It's great for that. Finally, all of this will be controlled by Python, which again is great for finance, has some fantastic libraries like Pandas and Scipy, which are both being used here. And it is actually very easy to code in. So it definitely simplifies our task and lets us focus more on the logic behind it. So first things first, we will start up our KDB server, which is going to run in the background on port 5000. Okay, it's already running. Next, we will start up our RabbitMQ service, which again will simulate our exchange. Okay, and that is run by server.py. So as we can see now, it's not really doing anything. All it's doing is waiting for data to come in. There's nothing to feed it yet, so it can't really do anything. Once we get sufficient data, meaning there's been several historical trades placed that we can analyze, you will see this server start taking trades from our strategy. So let's send in some orders. To do that, we will create a client, which is going to be the equivalent of just a market participant. Okay, that is handled by client.py. So as I run this, we see this client is sending in orders into the server. Now, there's not enough historical data yet, so we don't see our strategy take any of these orders. While that's happening, I will create a few more of these clients to simulate multiple market participants, and RabbitMQ can handle large amounts of these at any given point in time. So we see that it got some historical data already, and it's starting to place orders. So we see that our strategy is maintaining its portfolio, it's maintaining its average cost, its P&L, and it's placing trades against the, at this time, only market participant. But let's add a few more. Okay, let's just make 4 in total. Just keep it simple. Okay. Now, we could have a lot more. Rabbit can handle it, but just for simplicity, let's keep it at this. So we see that it's trading fairly rapidly now, which is fine. It's maintaining its own position, and it's buying and selling shares, and it's trying to come out positive. Looks like its P&L is slightly negative now, which is fine. That could certainly happen. Okay. As that's running, let's have a look at some of the underlying code. So first, let's start at the server. RabbitMQ is very easy to use. All it really requires is actually this amount of code to get the server running. All of this will take in buy and sell orders from the clients, and it will forward it on to our main strategy to analyze. Clients are again handled by this script, which generates somewhat random prices. Now the prices are not entirely random. They go all along with the market price, but there is enough variation to simulate actual trading that happens in the market. And finally, let's come back to our trading strategy. So what this does is it will take historical data, it will weigh it, with the most recent data having more weight than older data. It will analyze it, and it will decide which side it wants to be on, and place trades accordingly. And finally, it will maintain its risk control and avoid being too heavy on either side. And let's come back to our exchange and see how it's functioning. Okay, so here we are again. We can see it's still running, orders are still being placed, and each trade is having a positive or negative effect on our P&L. We see that risk control is working, and this can just roll on and on all day. Okay, well, that pretty much sums it up. It's again, it's a very simple version of what happens in a real market, but I think it does a good job of showcasing how all of these tools can run together fairly seamlessly, and how easily Python allows us to simulate a stock trading market. All the code is available on my GitHub, which is at the link below. Feel free to ask me any questions, and I will see you soon.